All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Very interesting morning out there. We had Ben Bernanke comments or statement to the Congressional Committee released here before the market opened this morning, and we saw S&P futures go from decently in the red to solidly in the green, and the chase for S&P 3000 was on, and market opened up, and boom, they chased it up to S&P 3000, and we have seen the buying pretty much subside here since. Now, what was very interesting about the chase is it wasn't en masse. It absolutely was not en masse. In fact, some of the best stocks out there in the market didn't bother to participate. And in fact, if we look at it now, there are almost 200 decliners in the market with 300 advancers. You don't see that on a big update. And today is not a big update, right? The S&P, even at its height, was up, 0.7, 0.8%. This is not one of those kind of monster rip days, and I know when we have a market that's, just not moving a heck of a whole lot, it can feel that way. This morning was about, hey, Bernanke made some comments, and boom, we go chase S&P 3000. But did Powell made some comments. But did Powell really say anything different? Did he send any different message? Not at all. Not at all. Right? And so, yes, for the media to react to and home traders to, get their panties in a bunch about a few things, sure. Does it cause and create emotion? Absolutely. Is there any real material change happening out there market-wise? No, not at all. Not this morning. We're not seeing it in the metrics. And in fact, it's one of those days where if it does reverse, we're talking about, something where we could see a sizable sell-off, come in here to the market. Okay, but anyway, that's what we're seeing here this morning. A lot of upgrades, a lot of downgrades. We'll talk about a few of them here as we go forward. But let's start with the challenge, and we're in one position going into today, and that is on Under Armour, and the option is 225. This pullback in Under Armour here today, even though it's not a ton of exposure. It threatens to give us one of the worst days for the challenge so far in terms of gain and loss. I believe we're down 400 or 500 bucks here. Almost 500. So this would be maybe the worst day of the challenge. I'll have to go look at the data, but might be the worst day of the challenge if it were to end here. Which, stinks. Absolutely stinks. But, we're still stuck around this kind of 11,000 in gains mark. We've been a few hundred above, a few hundred below. We've just kind of been stuck here as the last, it really kind of since, who was it? Boeing. Boeing was the last stock that really got it some traction, and then we got a little bit out of Bank of America, but the rest just kind of, just haven't really given us our two average true range moves and that nice trend follow through. Bank of America gave it to us in 2 days there, but knocked us out as it didn't get any further follow through. Just kind of danced around here and really just in a consolidation phase and went very quickly from that kind of trend phase into that consolidation phase here with it. Disney was very frustrating yesterday, having to get out, and even on video I said, chances are it goes higher. And I said to my brother afterwards, I think I made the right decisions in terms of the challenge, right? And the algorithm and playing the process. But I think I sold the stock that's going up tomorrow and held the stock that's probably going down. But anyway, it's neither here or there. Not something that is in my control at this point. Is the challenge is definitely better off being run with the algorithm and pressing on forward there. But that does put Under Armour in a precarious position here. The gain loss is very small now, and so if it does go red here by the close in terms of gain loss, it is something that I will have to close here with it. Now, this morning there are no new entry triggers. Okay, that's sad. there is a lot of trigger potential out there. So let's go take a look at some of it. Chevron. This is one where a lot of trigger potential. If it weren't the morning, it would probably trigger. But as you know, the parameters are just a lot tighter in the mornings. But has the fresh 3-7 crossover. Stoke 39.1, well above 50. Here for Chevron, and in a rather nice position. Another one is Valero. And this one I've been watching a lot this morning, not because is it going to trigger or is it not going to trigger, and it's not triggering just yet. Could easily trigger by the close, but my concern with Valero is, can I get into the options and get a decent risk reward on the options? If you've ever traded Valero, you know the stock can move a heck of a whole lot, and the average true range on it is $2. If I come in and I buy the 80s, the first strike in the money, the 80s, they're going for 460, and I get a $4 move, which is 2 average true ranges, I'm looking about a gain of about $2.80, almost $3 on the option, which is roughly 70% increase, which is nice. 2 average true range, 70% increase. Okay, great. If it goes against, right, and I lose about $1.40, $1.50, I'm talking about a 35% decrease. So it's about a 2-to-1 risk-reward ratio there, with the ATR setup. But, it's a stock that has earnings upcoming. And so it alters that risk-reward ratio. I look out of the money here at the 85s, and the reward potential is significantly greater, but the risk potential is also greater. It is one of those where, if it has a bad day, it could easily, be sticking us with a 70-80% loss, even though we have, that stop level. But if that doesn't come in at the right time, it could easily sit there. So they're in a very precarious position here with the options, and it's not something I can go with a different date. As the spreads, you can see what the spreads look like. They're just absolutely massive here on it. So, we'll see if it triggers. If it triggers, I'm going to go get in here by the close. But it is one where we haven't seen the options, kind of that precarious here with it. But Chevron, Valero, EOG has potential, has some 3-7 crossover action, but is not triggering here so far this morning. And then if we get out of energy, we have Honeywell, which had a 3-7 crossover on it this morning, had a trigger on it here before I got on video, but as I ran the scan at the proper time, it had reversed and is not sitting there with a signal. Intel as well, high potential of creating a signal here. I suspect that if it were the close, we would be seeing a signal here in Intel. So, some trigger potential there with Valero and Intel, and, even the Honeywells of the world and, Chevrons of the world as we get on later here today. But, what we don't see a lot of are days where there's a lot of upside crosses and a lot of downside crosses. Well, today we have, quite a few downside crossovers. Target, right? 3-7 downside crossover. It's not triggering. It's coming off of highs, so it's not going to create a trigger. But Whirlpool, same thing. Coca-Cola, very same thing. They're all, with some downside 3-7 action on it here today. Let me just pull up the scan, see if there's any more of it that has come in. But here, just for the watch list, let's pop this open. Because the market is weakening here just a little bit. Yeah, Bristol Myers, JD with the downside 3-7 crossover on it here this morning. Again, this didn't show up on the challenge scan, but these are stocks on the challenge watch list. With that downside, action there to them, and we have a very very interesting mix, going on here today. And what does it speak volumes to? It speaks volumes to the differentiation that is out there in the market. That theme that that we have talked about over and over. This isn't a market where it's everybody into the pool and everybody out of the pool, right? That's not what this market is, and it's not what it's going to be without some sort of monster catalyst. And the Fed rate cut is not a monster catalyst. Chinese-U.S. trade talk is not a monster catalyst. We need something different, something the market's not expecting, something, maybe the Congress passes an infrastructure bill. Maybe, missiles are lobbed between Iran and the U.S. That type of catalyst would be needed to really kind of, end some of the differentiation out there. But until that, we are going to continue to have a lot of differentiation. And I think today really kind of speaks volumes to that. So anyway, that's the challenge here this morning. Nothing to change there. Under Armour holding on to that, and then some of the stocks that have potential for triggers here this morning are still in play, and we'll see if they do trigger here this afternoon. Okay. But S&P 3000 here this morning. Think about this from a fund manager standpoint. I'm not talking about from a TV fund manager standpoint. I'm not talking about your personal account. I'm not talking about the neighbor next door. I'm talking the money that we've talked about all year this year in terms of the summertime action. This summer is a very known summer, meaning the variables are well known. We're not looking at a lot of variables that are not unknown. Yes, there's always what's going to happen. But when you look at the variables in this market and for the last several months, they have been some of the most, it has been one of the times where the variables are more known than, has been in quite some time. What do I mean by that? Well, we know what the economic data is. It's not changing. It is what it is. We definitely know what it is. We know what the earnings outlooks are, right? And they may not be fantastic, but the knowledge is there. There's not a lot of uncertainty about what earnings are going to look like. There's not a lot of uncertainty about what the economic data is going to look like. There's not a lot of uncertainty about what's going to happen between the U.S. and China. We know what the incentives are. We know the incentives aren't for something to happen right away, but we know for the incentives are for something to happen eventually, right? We know what's out there. The variables are very known. And when you look at big money managers, what are they doing? Well, they're willing to be buyers, right? But they're not willing to be big time chasers. They're willing to be sellers, but they're not, going to sell in panic, right? And they're stepping in, in a very kind of differential way, and a little bit in here and a little bit out of there. And, we have seen that since this challenge started. And, we talked about some of that as the market was going down and some of the incentives. And, we saw that quick, nice pop. And then we've kind of had a little bit, just kind of a bleed higher really since, with that. But, nothing has changed. Today with Powell's comments, nothing has changed. It is still the exact same market that it has been. And, there's not a real change here to that. Let's face it. Are you going to look at today's action? If the market were to close today and look at it 3 months from now and go, wow, that was a big game-changing day. That was the day where blah, 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 blah. No, you're not. Right? It's going to look like every other day out there in the market. And keep that in mind. Keep that in mind, as you're looking over, your own positions, as you're looking over your own decisions. And, we've talked about this mentality that the market is, very bearishly slanted. I'm very interested to see how the sentiment data changes this week. And, if we see the sentiment data actually shift and become, more bullish, or if we see the data shift and become more bearish. I do believe if we see the data shift and become more bullish, we're going to have a pullback before the next big leg up. But I think if we see the data become more bearish, the market's just going to, break 3,000 and go, up to something like 31, 31.50, 31.20, somewhere in that area is what I would expect to see. So very interested to see what that data looks like here. Okay. All right. So anyway, that's my 2 cents on the market here this morning, and the actions here for the challenge. One last stock I wanted to show, and then I'll tell you just a little story, just a short story here. But FedEx. FedEx was upgraded by Goldman Sachs this morning to conviction buy. And if you've been following Goldman Sachs upgrades, downgrades lately, what has been happening is when they upgrade a stock, the stock tends to get hammered very soon after, and then the stock tends to march on higher, at least on the conviction buy side. FedEx this morning on the open had a 3-7 cross to the upside. I don't know if it would have been a challenge trigger or not, but I suspect it would have been. Right? It has reversed. It's not a trigger where it sits, and it doesn't have a 3-7 crossover. But this is one where very interesting upgrade by Goldman Sachs on this stock. I'm grabbing it here. I thought I had written it in my notes, but let me grab the upgrade real quick just so I don't misquote it here. As you know, FedEx is just to me one of the most interesting stories in the market right now. But Goldman Sachs, they started FedEx with a conviction buy rating, right? So they have not had a rating on FedEx. They're kind of new to the party here, and they put a $200 price target on it, right? $200 price target. The analyst says the franchise is too strong to be kept down, but acknowledges that his recommendation is based primarily on valuation, since the company has to deliver on several show-me issues for the street to turn more constructive. The stock may appeal to investors with a longer-term horizon. One of the things that investors are struggling with is finding really good valuations out there. And so there's a temptation to go and to take a look at something like a FedEx and say, it's cheap now. Maybe the value is a lot better, right? Or something like a Triple M. It's cheap now. Maybe the value is a lot better. But in this market, are you getting a better value out of a stock that's significantly more expensive, like a Starbucks, whose valuations are absurd? Or are you getting more value out of something like a FedEx, whose valuations are, kind of cheap? In this market that we are dealing with this summer, investors are not willing to buy cheap down stories. They're willing to buy stories that shift and that change. They're willing to buy the Microns of the world, who earnings, was a major shift in some of the fears that were out there. But so far, we have not seen that this market is willing to buy pure valuation stories. We could argue Lennar, from a pure valuation standpoint, is really nice right here. Market is not willing to buy the valuation stories here just yet. What does that mean? What's the significance of that? Well, when the market starts to buy the valuation stories, that's when we tend to see a top, kind of come into the market. And, so far, market's not really concerned about valuation. It's concerned about growth. It's concerned about where is the growth. And if you have growth, the market is going after you. Amazon, you have growth, market wants it. Right, and that's going to continue. That it's not going to change. And if you don't have growth, you can get into a valuation story, but you're going to need to show some growth in order for investors to really jump in this type of environment. Okay. All right. So anyway, those are my thoughts on the market and some of the various stocks out there in challenge. But this morning reminded me of a day, and reminded me of back in my fund managing days, and one of the reasons why I ultimately hung up my fund managing boots and said I'm not going to do this anymore. We were coming off a quarter where the fund appreciated by 25%. Yeah, 25% in a quarter. It was a monster quarter for us, and it was, great and fantastic. And the market wasn't up all that much that quarter. We outperformed the market in a huge way. We had a few things go our way, and it was very nice. And, Yeah. But most days during that quarter, the market was pretty flat. Didn't really move a whole lot. And, the fund would just kind of grind a little bit higher. Nothing special. Nothing, not a big explosive up day. But just a small little gain here. 0.4%, 0.6%. The market's, 0.1% move. And the fund is up 0.6%. Most of the days were like that. We didn't have those days of boom, boom, boom. We make all our gains in 2 days type of deal. And, the quarter closed. And great, fantastic. Did all the quarter end stuff. And then the next quarter started, and we took the same strategy, same technique, same things in play. And the market had a day where it jumped 3%. Jumped 3%. And the fund went up by 0.7%. You say, well, no big deal. What's the big deal? Blah, blah, blah. Well, that day, my phone messages went off the hook. It was one of those days where the calls in were more on that day than they had been in the last 3 months from clients. What's going on? What's happening? The market's up big and we're not making money. What's going on? Blah, blah, blah. Right? There was this panic. There was this concern of, oh my goodness, did something bad happen? Is this a sign? Why aren't we up? If we're making 0.4% when the market's not moving, why aren't we up 6% or 8% when the market's up 3%? It was a very frustrating day for me because I felt every bit of that. Man, market's up big and we're not up big. I felt every bit of that. It stinks. It's a terrible feeling. It's not a fun feeling at all. And it's a feeling that traders, go through, investors go through. It's just a reality of the game. And then all these questions of, hey, why, what should happen, and all this hindsight talk, right? And the only thing I could say is, yeah, it stinks. Terrible. No fun, right? There was nothing I could say. I couldn't look back at the previous quarter and say, hey, you know what? We're doing the same thing we did last quarter. What does one day in the market matter? I couldn't say that, right? I couldn't kind of put people in their place at all. It wasn't my job to do that. It wasn't my place to do that. But it was one of the most frustrating days of my fund managing career. And I remember it vividly. I remember some of the conversations vividly. Some of us, have a little bit of laugh about it, since then, as I do stay in contact with several of them. But, one of those days where just trading, those types of days happen more often. Those types of days, are more commonplace, especially for option traders or spread traders, to where, you're not performing with the market. You're not trading the market, so you're not going to perform with the market. You're going to lag the market sometimes. You're going to lead the market other times. And when there's a big move in the market, right? Let's just say you have a whole bunch of puts and there's a big drop in the market, and yet your puts don't perform very well. Or you have a whole bunch of calls and there's a big pop in the market and your calls don't perform very well. It'll be a period of frustration. As far as what individuals do at those times, we see a lot of bad decisions made, during those times by people, and that will always happen, because of the emotions that come into the market. But today is one of those days for the challenge. And let's face it, this is not a challenge-changing day, right? The challenge is not changing today. There is nothing about any of the action in the market or in Under Armour that is game-changing for the challenge. Now, it could be game-changing later today as signals come in, and we make some trades on some signals and get the moves. What the decisions we make today could ultimately be game-changing. But what's happening here today is not game changing, but there's that kind of suck feel of, hey, come on, market rallied this morning, our trade didn't, and yes, we're not trading the market, but man, it would sure been nice to stack in some gains here this morning. And there's not a whole lot that I can say about it. There's not a whole lot that I can do to take away that emotion that people feel, or that even myself feel. And there's not a whole lot of consoling that I can do for myself. It's not something I can look and say, well, Jeff, blah, 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 blah. The only thing I will say about it is something that I've said before. It's something that I have said as we've been in some of these trades and have had to get out before the trade has moved, or gotten in with the market a little bit, helter skelter, right? Where maybe the chart didn't look beautiful, but the signal was there. You've heard me say this before, and that is the challenge, the algorithm-driven challenge is a process, not an event. It's not about maximizing every single trade. It's about maximizing the probabilities of the challenge. It's not about driving. It's not about trading or being on every short-term, wave of the market, up and down, and, getting in and out. It's about a process that has been in testing for over 3 years. A process that doesn't take all that emotional stuff into account, doesn't take into account how a certain stock is doing relative to the market on the upside or the downside. It takes the probabilities of individual stocks to do individual things. And we know what those probabilities are. And they're not absolute. Not every trade's going to do those things. But we know that over the course of time, that the process of those signals and those trades will yield better gains than most other strategies, and will yield better gains than, hey, what's the market going to do tomorrow type of strategies that really kind of depend a little more on luck than actual probability. And so just keep in mind. And part of me wishes that I could go back to that day as a fund manager and simply say to some of my clients, hey, it's a process, not an event. I don't know if that would have helped some. I don't really know. I know it wouldn't have helped me to hear that, but it is one of those things that I continue because the challenge in this type of format is new to me, right? Yeah, I've been testing it and doing all that, but I'm used to running a challenge and, hey, all right, I see this, let's go. I see that, let's go, right? And so this is something where I'm having to trust the process. And I look at Under Armour this morning and I see it go open up and it's up 10 cents and then it's red very quickly. And I go, oh, that's not a good sign in the morning. When we see that, that's something that can sell off. And my instinct is to get in to just sell it. And no, you can't do it. It's a process, not an event. And so if that helps some of you, then great. If I'm speaking to something that you don't experience, fantastic. Lucky you. That's absolutely great. But as we go forward, the days, up days, down days, swings, Fed this and Trump that and China this and this piece of data and this piece of earnings that aren't going to drive the decisions. A stock being in the green versus being in the red and going from red to green or green to red is not going to drive decisions. What will drive decisions is all right here. It's all right here on the challenge spreadsheet, and you can see exactly what those decisions are going to be made and how those decisions are going to be driven. And it's sometimes, there we'll look and go, man, I really wish the challenge was in this, that, or the other. But behold, it just, didn't get a signal or wasn't in a position to be that way. And there will be other times where, wow, okay, great, all right. Glad the challenge, parameters were such that, man, it knocked us out of Boeing before Boeing tanked, right? There's plenty of that here as well. So, keep in mind, the challenge, it's a process, not an event. And as we go forward, we will continue to run with that. Thanks for hopping on. Have yourselves a fantastic day. We'll talk to you this afternoon. I strongly suspect we'll have some signals, but some of that is a hope as well. But just looking at how things are set up, I fully expect that we will. But we'll see how the rest of the day looks and plays out here. Again, thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.